and we're going to move on now to gold with Anacortes. Anacortes Mining is working on a PEA at its high-grade oxide gold deposit, Cruces in northern Peru. We are going to be joined by Jim Currie. He is president and CEO. Jim has more than 40 years of experience in the mining industry. He's been responsible for the construction and the operation of mines in a number of countries around the world. He's a former chief operating officer of TSX and New York Stock Exchange listed Equinox Gold, Pretium Resources, and New Gold. He holds a degree from Queen's University in mining engineering and is a registered professional engineer in the province of British Columbia. He is also the 2014 co-winner of the prestigious AMEBC's E.A. Schultz Award for Excellence in Mine Development for his role in building New Gold's New Afton mine. Jim, it's a pleasure to have you with us at the Global Mining Symposium. We welcome you. And where are you joining us from today?
I'm joining you from Kelowna, British Columbia, where I'm on babysitting duty as my daughter-in-law has just delivered our 7th grandchild, a healthy little baby girl, and my wife and I are taking care of our 4-year-old granddaughter. So actually, yesterday I had hair and it all fell out during my babysitting stint.
From the excitement and the love, or just from the chasing around and the high anxiety of chasing after a 4-year-old?
Well, a lot of chasing around and yeah, all kinds of things happening. We had a power outage the other day. I got up this morning, my kid's pug took off out of the house. I had to figure out how to get that, but all good.
Just another eventful day in the life of a mining executive. Wow. Well, congratulations on the new grandchild. The greatest thing in the world is bringing new life into it. And how is Kelowna fared? My understanding is Kelowna's fared a little bit better with all this crazy weather.
Kelowna's been fine. Not too much rain here, but we did have a big windstorm that took out the power the other night. So not totally unscathed. And there's no food in the grocery stores. So all the highways to Vancouver are closed, and they haven't established an alternate supply chain. So you go into the grocery stores and literally you can buy kumquats and lemons in the produce section and canned milk, and that's about it. So it's yeah. I mean, we're okay. My son had a pretty full larder before we got started, but yeah, it's unless they open up these roads here pretty quick, it's going to be pretty interesting.
Well, our thoughts are with all of our friends out in BC at this tough time. So hopefully that does get resolved quickly, and at least you have lemons to ward off the scurvy, right?
Yeah, exactly.
Okay, Jim, I will turn it over to you, and we'll watch with great interest for your presentation.
Perfect. Thanks so much. So if I can find my presentation here. Okay. So there we go. And I'll set up the slideshow here. Just give me a sec. Good. Yeah, so I'm here to talk to you today about a really brand new story. It's the company's called Anacortes Mining. It's a brand new company. It was formed with the merger of a shell, capital. A venture capital pool company called First Light Capital. We took over a company called New Oro Peru Resources and to form Anacortes Mining. We started trading just in early October. We've only been trading a little over a month, and the primary asset is our Tres Cruces project, a high-grade gold project in northern Peru, which has been under option for most of the last 17 years with Barrick. And so for most of you listening, or those of you that would tune into the recording later on, this is a brand new story, and we think is a very exciting one. As the last speaker and other speakers have said, I urge you to look at the forward-looking statements. A number of the things I'm going to say here will be forward-looking. The only truth is that I am here and I have a lot of experience in this business, and we do have a gold project. Some of the rest of it is speculation. So if you're going to buy a junior gold issuer, what are you looking for? We think that we check all the boxes. So if you look, we've got experience management. I'm a guy that's built and operated mines all over the world. Others on my team have similar experience. we've got a great project, which I'm going to tell you about here in the coming slides. We're in a great location. We're in a belt of rocks that extends from Anacortes at the north, which is Newmont's huge mine that's produced more than 50 million ounces, to Barrick's old Pierina mine, located in the south part of the belt of rocks. That's 600 kilometers, and it's had a number of very prolific mines in it. We're in elephant country. Exploration upside. I'm going to show you a slide near the end of this presentation, which will show you a number of holes that ended in very, very strong gold mineralization, and only a portion of our concessions have been explored. And we have excellent share structure. We only have 42 million shares out, 53 million fully diluted. We're currently trading in the $1.70 to $1.90 range, and I'll show you later on, I think we're a screaming buy. So the Tres Cruces project over in the right there, you can see where it's located. It's only about 10 kilometers away from Barrick's Lagunas Norte mine, which was the Barrick project that actually did the exploration on this thing. 4 mineral concessions, reasonably large piece of ground, 3,000 hectares. For those of you that still talk metric, it's 11.5 square miles. Interesting to note that we own both the mineral concessions and the surface rights. Barrick bought the surface rights way back in the early 2000s, and we bought the surface rights back from Barrick as part of the deal to turn the project over to us. Project was operated by Barrick for 17 years, as I said. They did the bulk of the drilling on this project. It's well drilled. 95% of the resource is at the indicated level, and most importantly, more than 50% is core drilling. So you can be very confident in the numbers that we quote in our resource base. I'll talk about the mineral resource in a coming slide, but as you can see, we've got 2.5 million ounces in indicated resource, only 100,000 ounces of inferred, so it's well drilled off. And the thing I'm going to talk about the most today is our high-grade oxide resource that grades 1.28 grams per ton, which is one of the highest grade development projects out there right now. Excellent metallurgy. Initial indications show 82% recovery on column leach test, which is very high recovery. Strategic location. As I said, we're within this. We're in elephant country. I can't say anything more than that. The Department of La Libertad, where we're located, one of the most mining friendly areas in Peru, a number of mines there. When you hear about problems at places like Antamina and other places, they don't have those problems in this area because the operators have been very good with their social license. They've made good contracts with the locals, and they execute on the contracts. And so what you have is an area of Peru where the people have good jobs, and infrastructure has been put in place to help out the locals by the various mining companies in the area, which of course include Newmont, Barrick. Barrick has recently sold Lagunas Norte, but Barrick has been there for over 20 years. And Pan American Silver, which owns 2 mines in the area. Excellent infrastructure, power line, water, skilled workforce, a paved road to the city of Trujillo. If you can see on this little slide here, there's even a little airport in the area there. So you know, I've worked in a lot of parts of the world where it was very difficult to work. I'm actually looking forward to this. I'm not going to talk much about the geology here, except to make a couple of points. It's a low sulfidation epithermal gold deposit, and these things can extend up over 500 meters in thickness. But most importantly, they are often at the top of big porphyry systems, and we've got a couple of feeder zones and big feeder zones, which would suggest that we are on top of something even bigger than what we're seeing right now. And on the right here, I will show you that, you know, you can see these drill holes. The thing has been very, very well drilled off, and we will do some more infill drilling as we head towards feasibility study. But first steps first, we're going to get through this PEA, and we're going to do some exploration drilling, which I think you'll find very exciting. Current mineral resource. You know, oxide, we've got just pure oxide without any sulfide in it, 425,000 ounces at 1.37 grams per ton. Leachable sulfide, which we're seeing recoveries up in the 65% range. on a little bit lower grade, but still very high grade for a leachable deposit. So that makes 630,000 ounces, and we believe that's expandable. Very importantly, you've still got in the order of 2 million ounces of sulfide. And when I show you some of the exploration potential here, I think you as a viewer and investor may agree with me that this could be very, very expandable. So I've mined a lot of low-grade deposits in my career, typically 0.3 grams per ton and 0.6 grams per ton. Most recently at Equinox's Mesquite mine and Castle Mountain mine, where the head grade was 0.3 grams per ton, and we were making money. I mean, you can make really good money at these gold prices at 0.3 grams per ton. Well, imagine the kind of money you can make at 1.28 grams per ton. So I show you a couple of cross sections here to whet your interest and appetite here. You've got sorry, I'm just trying to find my cursor. So this is a cross section through the northern part of the Oxide pit. Well, look at this intercept, 63 meters of 2.2 grams per ton. That's, for me as an operator, that's like pennies from heaven. This one even better. A cross section through the south end of the deposit. You've got 36 meters of 6 grams per ton. You can make money underground mining this stuff. So in an open pit heap leach configuration, this is truly something that we believe will be very, very profitable for us. Where do we stack up against against our competition? Well, on the left-hand side here, you've got Newmont's Coffee project, which they acquired with the Goldcorp merger. Coffee is a great project, but it's in the middle of the Yukon. It has no infrastructure. I used to do placer mining up there 35 years ago, and it's south of Dawson City, and Dawson City is your local supply center. The nearest supply center after that is Whitehorse, and there's no power up there. On the other side of us is Los Reyes, which is Prime Mining's, and Prime Mining's got a $500 million market cap. Today, we have a $75 million market cap. And basically, it's the same number of ounces, and we've got higher grade. Go to Prime's website. They have about 600,000 ounces at a gram, and they have silver values on top of that. We haven't even tapped our silver values yet. This was drilled off and assayed by Barrick largely as a gold oxide deposit. So we think we're really favorably placed when we compare against our competition out there for your investment dollars. So PEA inputs, what are we going to do? So we've just recently, if you check our news releases, and by the way, if you haven't written it down, please do so. Our website is www.anacortesmining.com, anacortesmining.com. I suggest you write that down and remember it. But we just recently announced the commencement of our PEA. We're using M3 Engineering, very reputable firm out of Tucson, Arizona, and we're using their office out of Lima with support from Tucson and various specialist consultants that will help us out. So the inputs to the PEA, the resource I've talked about, strip ratio about 3.5 to 1, production rate plus or minus 80,000 ounces a year, maybe a little higher. Processing would be 3-stage crush to minus a ½ inch, and then conveyor stack to the heap leach. Initial capital, $80 to $100 million, really depends on what we're going to do in terms of owner mining and crushing versus contract mining and crushing. At this grade, we can easily afford either way, and we'll just look at which way is the most profitable. Gold price, we'll use $1,700 an ounce, which I think is very conservative, given the current gold price regime in the 1850 range. So that's the PEA. Let's talk about exploration potential. Well, as you can see at the bottom of these sulfide pits. So up here, if you follow my cursor, you've got the transition zone into the sulfides. Well, look at the bottom of these resource pits that we've pulled. You've got these large feeder zones, and even here, you've only got one drill hole through this thing. And what we're hoping is that all of these things connect at depth, and that's very possible. This is the longitudinal section. You know, you've got some very, very strong feeder systems here, and we believe in this one, for example, that the zone's coming up like this. This one here, it just ran out a drill hole. It ran out a drill hole. That's why you've got the blue there. So look at these holes that have ended in mineralization. So the one I point to you is RTC 255, 228 meters of 3 grams per ton. Folks, this is a world-class hole. If I put this out tomorrow in a press release as a brand new hole, we're going to trade 1 million shares tomorrow. There's absolutely no doubt about it. This is a world-class hole. This is right up there with the discovery hole that discovered the deep post and the Betsy deposits for Barrick, which was only 228 meters is 750 feet. The discovery hole at the deep post was only 600 feet. It was much higher grade. It was 9 grams per ton, you know, 3 times the grade, but that was at $400 gold. So, you know, this is to me, this is very, very interesting. Look at here, 66 meters at the bottom of the hole, 4 grams per ton. And, you know, we're only 210 meters deep. You could see here on hole RTC 237 that at 350 meters, we're still in decent mineralization there. And there's only been a couple of holes to 350 meters. Basically, the bulk of the holes were in the 200 to 250 meter range. And the reason for that was that Barrick drilled it off as an oxide deposit. They drilled it off to have feed once they finished the oxide at Lagunas Norte. They didn't do anything with it because basically it only cost them $250,000 a year to keep the option in good standing. And so they maintain the optionality on this resource. So it was, you know, it's been a well kept secret, this project, and we're really, really excited about it. I'll just show you one more slide with a couple of more intervals. These were not holes that necessarily ended in mineralization. I see Anthony here. He's giving me the hurry up and finish. I'll be a couple of seconds. You know, 192 meters of 3.4 grams per ton, 138 meters of 1.84. These are world-class numbers, folks. So there's lots to look forward to. Next steps, very quickly, we're going to take this thing through PEA. We're going to do some infill drilling to get us a feasibility study and get some core for met testing, and we're going to test out some of those deep targets. And that's the story, folks. This is a pretty exciting story. You know, it's backed by a very well-respected management team. We're looking to build a mid-tier producer with 3 to 4 operating mines. And this is only the initial asset, and it's going to be really exciting. So I hope you'll stay tuned to what we're doing, and I'll open the floor to any questions you might have.
Excellent. Thank you, Jim. Yeah, those drill results are they're pretty eye-catching for sure. Listen, you mentioned comment here around you're in elephant country. You have some very famous mines around there. Are there any synergy potentials in the area, considering that there is such well-known mining projects around?
Well, actually, thank you for asking that question. And I that wasn't even a softball question. I never asked you to ask that. But Pan American's an 11% shareholder in our company. And they own the Lorena mine, which is only 30 kilometers away from where we're at. So yes, synergy with them. We talk quite regularly to the new owners of Lagunas Norte, Baru Mining, which is a private company out of Singapore, and we've already agreed to share our efforts in terms of the social license and our messaging and our efforts in the area, and also things like environmental. So yeah, a lot of synergy in the area, no doubt about it.
We have a question here from Bill in the audience. He's asking, when are you projecting the feasibility study beginning and ending? Okay,
so yeah, thanks for the question. So we wanted to get some early numbers out on this thing. That's why we're doing the PEA now. With the PEA will probably be out in February. We're putting in our permit applications right now for the drilling program to, as I said, to do the infill drilling. We want to get this indicated resource up to at least 40% measured, and we need some more core for column testing. And that will, we should start drilling probably late in Q1 next year. That'll last, 3 or 4 months. But in the meantime, we'll take what we've done on the feasibility study, and we're going to do it around the PEA and do that to a feasibility level, because we don't expect the grade or the breadth of the deposit to change much. So we'll get started immediately, and we're hoping that by the end of 2022 or Q1 2023 that we will have the feasibility study in place.
Okay, excellent stuff, Jim. Listen, we're going to leave it there, but we will certainly be watching the story as it continues to unfold. Looks like you're onto a very exciting opportunity down there. Congratulations on that, Jim. We wish you all the best next year.
Thanks kindly.
Take care.